Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Monday, January 9th, 2023. It's the Monday after the non-farm payrolls, which is usually a great day for trading because you're going to often have a lot of movement one way or the other. Today we got it in both directions. And the reason for that, because people have the whole weekend to digest what came out on Friday. So if you remember Friday, right, we had that nice trend up most of the day after the number came out, right? We closed higher. Then when we reopened Sunday night, we opened, and started making new highs, right? We took out Friday's high. And then, where am I here? Okay, so then, Europe opened and we came down. We started making new lows. We went from 39.31 all the way down to 16.5. But then when the U.S. came out, it was just off to the races, right? A big, nice move higher all the way up to 73.25. Okay, then what happens? Eventually, we start selling off down to new lows. I saw an interesting tweet. Someone said, "What chart pattern is this?" Well, someone wrote knees, head, shoulders, knees, and toes because it just kept going down. I thought that I got a kick out of that. Honestly, I don't know who tweeted that. Whatever did, kudos to you. That gave me a chuckle. But looking at the order flow, it's quite interesting. Let's dig a little bit into it now. Last week I made a video about recognizing a trend day early, okay? And, again, sort of, even though we had this beautiful sell-off from 73.25 all the way down to, down to 09.75, this move up was also very nice. It's a very easy move to, in my opinion, to catch early. And again, sort of to recap what I talked about last week, recognizing when a market is flow driven is looking for those divergences within a relatively short period of time, the order flow divergences that are being failing, basically being taken out. All right, and today was no different. Okay, we saw a nice flow driven market. Basically, we had our first divergence right here, 39.54. A second one, 39.56.25. Again, what's an order flow divergence? It's a new or equal high. In this case, it's for a selling divergence. It's a new equal high with negative delta and the bar closing down, right? I know some people, they just want to trade every divergence, but you can't, right? You got to take it in context of the market. Just because you have a divergence doesn't mean you automatically get short, right? You want to put it in context with what's happening in the markets. Okay, so got a divergence, got another divergence. If you sold this one, okay, just came right back up next bar. This one, people will argue, well, it did come off a little bit. Okay, fair enough. But eventually it came right back up. So the first one's at 902, second one at 905. And then we get another one here at 935. So it's within about a half hour. Again, I like to give it, about an hour or so. Again, it's not written in sand. If I was looking at just 30 minutes, this is at 902 and this one's at 935, that'd be out of the parameters. When you're coding stuff, you got to be exact, right? If I told a programmer, okay, you got to code this for me, and they can, but I'd give them a time parameter. And if I gave them 30 minutes, this wouldn't show up. And this is what being a trader is, knowing when to extend it out 1 or 2 minutes, okay? So 902, 905, 935. Okay, you just get ready in here, okay? Because you got one divergence that failed, two divergence. Now you're sitting on your third one. You just drop your buy stop right in here, right above this high. If it comes back, it came back immediately. Sometimes you can get a little bit of a pullback, from this high at 59.5. Maybe trade down to 55, sort of circle around. But this one, it just came immediately right back up, took it out, and immediately made new highs, got all the way up to 63.5. And again, you have a buy stop 7 and 59.75. Maybe you get filled at your price, or actually if your buy stops at 9.75, probably you're going to get filled at 60, or even 60.25. But in this case, probably filled at 60 because there's some good liquidity there. When you're making new highs, unless a stop gets triggered, there tends to be resting liquidity. And coming up here, I can see the volumes. You can see 1,200. Here, 890 here, 877, even here, when you're sort of going sideways a bit, 900. So obviously, you could have got it filled maybe 60.25. Worst case scenario, you're filled at 60.5. How much heat do you take on this trade this time? Well, it did pull back off this high at 3.5, pull back to 58.5. So maybe you got filled here at the high of this bar at 60.5, 2 points. 60.5 should be your entry. Just move this line up here just so you have a good idea. And it keeps going up. New high 68.5, pulls back, doesn't quite even get to your entry price. Keeps going, making new highs. You get failed divergence, failed divergence, failed divergence, another failed divergence. Now this high up here, 73.25, is the high of the day. So even if you're buying it at 60.5, you got 10 points out of it, which is good. Maybe if you're trying to hit a home run and get 20 points or more out of it, okay, fine. Because we don't know yet that this is going to happen, right? It's just going to sort of fall off the cliff. So what are some of the signs in the weakness here at that high? Well, let's take a look here. Okay, so we hit our high 39.73 Okay, we do have a divergence there. I'm not going to talk about ratios yet. I'll get that later this week. I sort of want to get everybody up to speed on things that I'm looking for before I really dive into, more specialized readings of order flow. Okay, so 10.15 high, or so 10.17 rather in the morning, 39.73 pulls back, and then it starts making its way back up towards the high here. We get to 72.75. This is around 10.26, 27, 28. Okay, doesn't quite reach there, pulls back a bit, comes back down. Again, we're in a trend day at this point. We made a high. We made another attempt at the high. We're pulling back. It's hard to say, oh yeah, this is over right at this point. Even though you got a lot of negative delta, but we just had a big move up. Remember that. Keep that in mind. Because we moved from, we're cash open, right? Remember, we're cash opened. We're trading, in the 40s, even got down into the 30s, during that first 10 minutes of the cash, basically between 30 and we'll call it 40. Okay, this whole time in there. So we're trading 30-40 points higher. Okay, so that's already quite a move, but I'm not yet convinced that this selling is aggressive selling coming in to drive the market lower. Okay, that we're seeing up here rather in this area up here in the 70s. Because you do have the negative delta, but again, you had a nice move, so people are probably taking profits. You don't really see people jumping into the market, adding on to their positions here. What I thought was very interesting is when you got sort of to around 11:30, this third attempt at the high here, right? We got all the way up to 72.75. Now let's just draw this line here. I'll draw it right one tick here. Okay, so what do we got here? So the first times you're trading up here, right? You got your divergence, you come off, you're trading some volume up there at 72.75. You come off, and then you make this final attempt up here, and you just trade 2 lots. Right? That's not a good sign. Okay, it's like this market is kind of struggling to really make its move back up. I mean, there was some interesting volume here, right? Some heavier volume trading at 71.75 and 71.5. Obviously, you got this big buying imbalance going up. Then there's 1,000 on the offer here. Then it's bid here for 700. Or trade 700 on the bid, 681 on the bid. Even in the next bar, people are still trying to support this market, but it just gets whacked right back down. And again, sort of the telltale sign is this 2 lots, right? We're now it's a green candle, so it doesn't qualify as an exhaustion print. However, I do have to respect that only 2 lots traded there. This was at the same level that we had traded earlier. Again, not a lot of volume even here, 10, 21, 28. So, about 60 contracts more or less. When we came back up, 2 contracts this time. And this is on the back of an area where there was some strong volume. Okay, the 72 down to, let's call it 71.75, 71.5, 71.25. Several thousand contracts here. We finally get past this volume, and it can't really trade much higher. Right now, one of the old NOFT signals, sort of you got your sequential decline here, 147, 188, 256, 1000, which is bearish as well. But the fact that we're making another run up at that high and it just dies out with 2 contracts is not a good sign. And then the market starts, basically pulls back down to around the 65-ish area down in here where it had been trading a little bit earlier. There was some interesting volume that went through here around 11:45. This is where things got a little bit interesting. You can see here, let's move this line here. Okay. So basically, right, just sort of close out that trade. So if you're long from those failed divergences, right, at 60 and right here at 60 and a half, okay, the fact that it's just sort of hanging around up here, can't go any higher. You have the high, make one attempt, made another attempt, and it's just going sideways. That's your opportunity to close it out. Don't let it come back down to break even. But you're spending a lot of time up around 69 because we hit that high at 1017, 1027. We made another run at it. 1055 made another run at it. Don't expect it to all of a sudden build up a head of steam and keep going. Now it could very easily, but chances are it's not. Okay. And you already had 2 attempts to go up, make new highs after that high was made. So if it hasn't done it already, it's probably not. And you saw some nice aggressive buying coming in here, right, with a nice stacked buying imbalance there. That's your opportunity. Just screw it, get out. I'm sure there's other traders that were already long also thinking the same thing. You see a lot of aggressive selling coming in here after this high fails, or this attempt at the high fails, right? You're seeing selling imbalances, 2 here, 1, 1, 1, 3. So you're seeing a lot of selling take place there. Now, what was interesting was here, this 39.57 area. Okay, so we came down, started coming down, and all of a sudden there's heavy volume coming in, right? This isn't at a level we've just been trading at, right? We came down in here. Now you got big offer here. You can see the the 415, the 500, the 732, the 1200, obviously the 800. So it's around 3,500 contracts going there, and it's kind of holding, right? It's acting as resistance on the market. Every time the market sort of comes back up, it comes off again, right? I mean, those little guys that trade with the dome and the heat maps, they see that size in there. They're all excited, they got their dick in their hand, and they're like, oh, I got to sell it. Okay, well, it sells off, they're jumping in front at 6 3/4. It sells off down to what, 4.5. It's not a big move down. Finally, we get past it. Okay, so you had a big offer in there that was acting as resistance, and all of a sudden it's failed. So what do you think is going to happen, right? That resistance has been removed from the market. You look for the market to pop back up, and it does. Pops back up from, again, that was at 757, gets all the way back up to 60. It just sort of hangs around there. You would look for it to be some sort of support. It did come down, to it 57, bounced back up to 59.5 before it broke through again. And then it sort of just, I don't want to say it rotated around here, but it just sort of was rotating back and forth at this point. When we got up to around 1 o'clock, okay, when we're still trading, around the 46, 47 area. I mean, we had come down to 36. Then, we get back up here right around 1 o'clock, okay, on the bar chart. It's this area right in here, right? We sold off, got down to the mid 30s, then back up to 45. And then the rug got pulled out. You can see the big down candle. What was interesting, and again, this is where using a footprint chart is going to really make a big difference in your trading. All you got to do is just look for this thing. It's an exhaustion print here, 1 contract. It's a red candle. What you're looking at is the volume on the top offer side. That's why it's highlighted in red, because that's bearish. And it's coming, right? What happened? Market sold off, rallied basically about 10 points, over 10 points. I mean, 34.25 all the way up to 46 3/4, trades 14, then trades 1. So yeah, we're getting less volume, but this 1 just sticks out like a sore thumb. And again, other softwares have copied my exhaustion print concept, right? Which is just basically, it's no algo or anything like that. It's just highlighting something unique in the order flow. It's telling you on this red candle that one contract traded, right? You got one here, now you got bullish one here. It's green, but put it in context. Where is it happening? It's happening at a swing high after over a 12-point move, basically. All right, so you're looking for the market to show some signs of weakness, and you see it. Now, what's the difference between this one and this one? I mean, you could say this is a swing high, I guess. I mean, 34 1/4 up to 41 1/4. I mean, that's that's not as really a big swing high, but it's a lower high, obviously. This one is just more optically better. But if you're watching things like the delta, right? This is what I talk about, putting the pieces of order flow together. Here you got, it's a smaller move, obviously. It's about 6 points, 5 points, 6 points, but it's just minus 24 delta. Here it's minus 460. So the selling is much stronger. Obviously the volume is stronger, 2840 in the bar versus 1922. So almost 900 contracts more volume in this candle. But it's just more stronger in my opinion, right? Because the volume is stronger, the delta is stronger. But even if this was like this next bar, minus 290, that's also nice. If this bar had a nice strong delta of minus 240, 10 times that amount, yeah, I'd be excited a lot more. But seeing that delta of just minus 24 is not much. But here, after a 13-point move, you got that exhaustion print of one contract and then a strong negative delta. Yeah, look for it to drop, and it immediately dropped from 44 down to just about 34. It got down to 34 1/4. So almost 10 points rather, not ticks, points in 2 minutes, 3 minutes. Okay, but it never even got back up to that exhaustion print, right? At what was that? At 46 1/2. That was it. All right, then the move just, at this point, it was just like a rock rolling downhill. Just keep going on and on, lower and lower. Okay. I mean, and what was more interesting about this move down is you're just seeing, these bids are just getting taken out with impunity. You're seeing all that aggressive selling in there. By looking at the imbalances, right? And you can see supply coming in as well, but you're not, you got negative deltas, okay? And even when you have the positive deltas, they're not very strong. 29, 75, 58, 36. Where's your aggressive buying? It's really absent here on this move down. Okay, so, watch what happens with the volume. Now again, there's one other time, and let's just go back to that 105 time again, because that was also interesting. This is more of a nuanced look at what's going on in the volume. Now, like I said, this volume in this bar, 2840, was much better than this red candle here at 1922, the volume 1922, where you have the exhaustion print. But what I found more interesting was you had some nice buying going on here. Nice volume, 6,251, 6,184. Then at the high, 3,900. That's nice. That's what you like to see on a move, right? Whether it's higher or lower, you want to see heavier volume than normal, right? And you're seeing, it's much more than these previous bars. This is 1,700, 2,800, 3,900, 1,700. So it's just like, people like woke up. Hey, well, not say woke up. It's 1 o'clock. People really get busy at that time. So you got buyers coming into the market, heavy volume, nice positive delta, 1125. Next bar, very similar, 6,000 volume. Then 3,900, not bad. It's good. It's almost, it's very strong. It's not 6,000, but it's still strong. 3,900 is sort of one of your stronger numbers in recent memory. I'm not going to say, oh, you got to take the average of the last 20 bars and do that. No, you just simple eye check. How is it compared to where we were earlier? but then it starts dropping off here, right? 2,800. So it's gone from strong, medium, strong to kind of average. But now the selling is coming in. So you could almost see that what was making these bars strong was that aggressive buying, right? Obviously, you got the buying imbalances and the volumes, more volume being traded on the offer. But it's like 6,000, 6,000, 4,000, 2,800. But this one is dominated by selling, okay? So imagine if you still had some, just call it, I don't know, 2,000 more contracts or 1,000 more contracts that was on the aggressive buying side. You'd be looking at, again, 3,800 contracts, and this bar might be trading higher, but it's not there. It's like that buying is removed. That's why I talk about this is more of a nuanced analysis there. You're sort of speculating. I hate to say speculating, but you're sort of, if you see it enough, you understand what's happening is that buying pressure has been removed. It's strong, mildly strong. Now it's gone, right? And that's why, in my opinion, it's one of the reasons why that volume dropped off. But yeah, I mean, that move down, it was a beautiful move down, but really there were signs in here that the market was showing weakness. There was a great buying opportunity, like I said, at 60 and a half, all the way up, a nice 10-point move could have been had. But the fact that we're struggling at these highs, at the high of the day, coming back and then coming back again, lack of volume, and then when the market starts moving down, again, you see every time it starts poking back up, you're seeing lack of volume. So, understand, like, when you have lack of volume, it's a sign of exhaustion, right? Everyone thinks order flow is like looking at the book map or the depth of market and looking for big areas of volume. Well, yeah, that's just one part of it. You also got to look at the areas where there's lack of volume, lack of interest in the market, because that is also an area for opportunity. So again, I hope you guys enjoyed this video. If you haven't already, be sure to subscribe to the channel. I'm trying to get a video out every day for you guys, sort of talking about different things on order flow. So, if you really want to improve your order flow analysis, again, what I talk about a lot of things in these videos, and it's not about, oh my gosh, there's so much I got to learn. No, it's about taking the pieces of the order flow, finding what makes sense to you, and applying it to your own trading to help you become a better trader. So thanks, everyone. Have a great day. Bye-bye.